This is Justin Pulitzer. This is my weekend review video for Sunday, May 14th, 2017. This is, however, being recorded on Saturday the 13th. So, a hell of a lot I'm going to try and cover. This might be a little bit too ambitious, but let's do it. I'm just going to run through the 10 market keys, talk about some stocks and such that are related to there, some of the disaster du jours of the week, get into the major market indices, and then talk about some of the momentum stocks. So with regard to the VIX, we are printing some single digits here. They have definitely taken this down. It has gapped up, and it looks like it's trying to bounce a bit. So I wouldn't be surprised to see a little bit of increased volatility in the next couple of weeks. I shouldn't say the next couple of weeks, but yeah, next couple of weeks. But in the next few sessions, I'm not expecting it to get too out of control, but it could bounce around a little bit, maybe sideways to higher. It's had a hell of a time getting above the 200 MA and holding. You can see it did it here for a while, but then it gapped down below. So maybe a rally to the 20 MA, the backside of the old uptrend, might seem appropriate. The dollar. So the French elections are out of the way. I think that people feel a little bit more safe with the euro. You can see the dollar had a trend touch, a bit of a look below and fail, came back up. It couldn't even rally to the downtrend. You can see this 100 MA, which was support, became resistance. It's right at the downtrend line. And this now is starting to maybe look like a look above range and fail because we're now back into it. This area here, these like 99,233 kind of, and this trend are very important. So I'm keeping an eye on the dollar. If this were to take out this topping tail, I think we would see that 100 MA. But if this comes back down, I mean, we could start getting weaker in the dollar again. I mean, we could actually, I've kind of been loath to draw this in, but depending on how you want to draw it, we could be in a new confirmed down channel if we start losing these reference lows. So the dollar is at a big crossroads, so to speak. The ETF, that's key for the dollar. I've drawn in some important levels here. You can see we bounced off what was the old resistance. Now we kind of came in with a look below and fail. Now we've been down here, came up, and now back lower. 200 MA here is very key. So I would say you could use Friday's range as a gauge. You could either be long above it or short below it. Now we're way below this 50 MA. I would say a move up to the 50 MA and channel would be a good right or right out short area. Alrighty, the bonds. So all the Fed heads keep talking about how many rate hikes may or may not be appropriate. That being said, we held the support range right here where I had talked about a little bit of a look below and fail, and this could almost be could potentially be a professional gap up. You can see they tried pushing it lower here again, and then a gap up above all this this music, this whatever range, these musical notes. So we're above it. I think you could use Friday's range as a gauge, long above or short below. Keep it simple. I like that. HYG. There's a lot of talk about HYG, but not a lot of movement. It's just kind of chopping around in the upper part of the range. You have a 50, 100 MA confluence. As long as it holds that, I think it's kind of okay. If it loses that, I think it would be a foregone conclusion that the 200 would come into play. And you can see the 200 has been very key support with look belows and fails. So until we start losing the 200, I'm not really going to start getting too worked up about the HYG. I think a lot of that has to do with oil. Initially, when oil was really in bear mode, when this thing was just crashing, it kind of picked up some selling in the HYG. There was a lot of worry about credit worries, but I think a lot of those issues that had problems have either experienced the problems they were going to experience, or they've taken that opportunity to hedge out some of that risk. And you can see oil basically, when it broke here, it had a double bottom, rallied up to the top of the range, came back in, and then kind of doubled up the range lower. This was my target, 43.98, and it actually got 43.76. It's not always exactly to the tick. It doesn't always just work that way. So I'm thinking that this is back up here. We had some more bullish inventories and get caught a lot of people short. Maybe we see the 50% fib. We're right at the 38.2. And then this area is really the key. You have the 200 MA, the 50 MA, the declining 50 MA, and this is really the pass, don't pass line, this 49.61. Very key area. If the bulls can really get back up over there, I think that there is going and hold. I think that the shorts are going to be in some very big trouble, and there could be a pretty large rally. That being said, we lost these lows, and we're making a lower high and some lower lows. So until that pattern breaks, I'm not going to say that oil is bullish. I still think it's a little bit more iffy. I think if it would have held trend here, I would have been a little bit more bullish on it, but it did break. It didn't spend a lot of time below there. You can see its price was definitely not comfortable there, and we're back up. So this, to me, again, this trend line, these 2 days are key. If you're aggressive, I think you could be long above, or if you're also aggressive, short below. So the 2-day range, to me, is the key with regard to oil. One of the things that I found a little bit encouraging about oil was Exxon didn't make new lows with oil. If anything, it's kind of trending up a bit. We're above the 20, we're above the 50, and above the 10. This to me looks like it could be forming like a rounded bottom or some kind of a base. We won't know that for a fact until you start clearing some of these highs, but it definitely seems okay. I took the opportunity on, I think it was this day. I'd have to go back and take a look in my feed. It was one of these up days in Exxon. I think it was this day. I took off some near-dated short puts and rolled them down and out, just booked some profits from this move, kind of like a range high move where this kind of like broke down from. So I'm still long Exxon, but I guess I've been booking profits along the way. Amazingly, even with this being down, I've been a net long via short out of the money puts, and they've all, for the most part, been profitable. I've had some that I've had to roll, but I haven't gotten myself into any real trouble, which is a good thing. So Exxon, I'm thinking could be trying to resolve, maybe up at this point. China kind of didn't even get the 200 MA touch. I had been talking about this confluence area of the 200 and the 100 and the reference lows, and it's back up. So look, you had basically a double bottom, and now you're making higher highs. So that is a good thing. I think this MA confluence now is going to be the key. If you can hold the 20 and the 50, it's okay. Back below it, I think, would be a little bit more iffy. BIDU also starting to improve. Look at this. We have this triangle that I talked about, and the break was going to be key. Remember I said I was a little leery with the breakout above the triangle ahead of earnings. It promptly came back to the middle of the triangle, and instead of doing what it should have done, when you have a look above and fail, you should go to the lower end of the range. It's now back up. That's pretty bullish. This is now 1, 2, 3 times you're testing up here. So what am I thinking? I don't love that we rallied so many days in a row. What I would love to see is if this spent like a couple of days or a few days just chopping sideways here under the highs and then went, then I think you got yourself a nice long, and I would say the pattern is shifted. I'm a little leery here in BIDU, but I'm thinking it's looking a little bullish, actually. Same thing in the BABA. Pretty bullish. We got the 120, which we had talked about. I talked about trimming and trailing. You can see the old reference high up here was 120 to the tick. So it seems to me that there's some responsive sellers. If you do a 1.618 Fibonacci extension of this range, it's up to 124.62. So I like the idea of booking some profits in BABA into strength. You can see I also drew in a bit of an informal progression line. Let's give that the all-doing progression line status. So I think any move up into this area, particularly on the print, is a good an opportunity to book some profits. So I'm a buyer of dips on BABA. I don't want to chase, but I do think it is going higher if that makes sense. The biotech. So this has been a very, very messy, sloppy pattern. We've had a lot of tests, 1, 2, 3, 4, 5, 6 tests now of this upper end of range. We've been making some higher lows, which is good. And we're right on it here. This is sort of the breakout level. We've kind of had a couple of look-in and fails. It's stalling at the 50. So I think if you could get above the 50, it's probably a long for a move up. If you stay below the 50 and you lose Friday's low, if you're aggressive, you could try right or right out short, and then adding to it below this low, I would, think for a move to the lower end of the channel. I can't tell yet if this is still an up channel or if we're transitioning into a bear channel, and that won't be obvious just yet. If we were to lose these lows, I think we would come down to the range low, the 200. But look, you have these reference lows, and it could just be a new higher range. So this is the key. Any weakness, I think the 200 will be important. If we lose the 200, I mean, there's a long ways to fall. So I really want to see this range high clear. That's my take on this. I think if you're aggressive, you could use Friday's range as your guide, along above or short below, and just keep it simple. One of the things that I found odd, and this is one of the things that has me very iffy with biotech, is look at this. Look where this gap up. You see you had a down channel and a gap above the trend. It stalled right at the 200 MA. This technically, and I'll say this is why I'm always leery and want a little confirmation. This is a failed, what could have been a professional gap, and it didn't turn out to be. They took the gap up and sold it at the 200, and now we're way below. So look at this. I've drawn in a informal down to like where it bottoms kind of. But one of the things that has me a little iffy about it is if you look at this length of this decline, that's $65.65. If you look at this decline, this full decline, not counting the bounces, it's $69.33. So we could bounce here. I wouldn't be surprised if we do. But point-wise, we're not in that like upper to mid 60 level. And if you did a blended average of these two, that takes you basically down to the gap fill in the range low here at the 24s. So I'm a little leery with IBB. Short term, I think we could be in for a bounce, but we're not at a large enough point decline to say it could be like a good bottom. What would interest me, though, is look at this where this channel low, this bigger, more dominant channel low is. You have reference lows, a gap fill, and a channel low. If this were to like continue down, I doubt that's going to happen without some buying pressure, just because this is so much so fast, and you're into this low. I do think that there will be a bounce, but I think that bounce could be shortable if it's up to like these lows where the real breakdown took place. Often you have the breakdown, the check back, and then the resumption. So I think short term this is going to bounce, but longer term it may want to go a little bit lower. I would be into selling some out of the money puts for these levels, even here, because I do think there'll be a bounce. But any further weakness, I'm down to sell out of the money puts at those reference lows. And I think because it's so far so fast, it would be buyable. This Gilead is pretty awful. So I had been long for the earnings. I booked the profits. Remember, we talked about it. They had the gap down. It showed a lot of relative strength, but now we're down again below that low. I had sold some puts on this day, and they were looking good for a while, but now they're like way out of the money, longer dated 60 puts. You could see the 61.8 of the entire run is down in 57, so I'm not really that quick to bail on it, considering there's a lot of reference levels here, but I'm definitely leery of this move, and I may just take it off if we were to lose 65.70 or 65.38, whatever. Somewhere in here really needs to hold. I think it might, but I don't know that it will. So Gilead not acting super well. IYT transports. So this is sort of not, this is a bit of a conundrum. We have a triangle forming, right? Look at this. You have kind of this triangle forming and then higher lows, and we're like kind of right on it with hammers. So, I mean, it's sort of like you ever dance with the devil by the pale moonlight here. I mean, this is like what's going to be here, you know? If this does break up, it's a failed head and shoulders pattern, and this is probably going to go a hell of a lot higher. But if this does break down, I think the 200 MA is all but a given, because that's by basically the range low of the snapping the triangle. And I don't know that it wouldn't really go lower to the channel low or even like the 50% fib. So if you're aggressive, I think you could be long above the 2-day high because you have a hammer here and a inside doji, or short below this low here of the 161.39 for that play. So that's my trade on IYT, either long above the 2-day high or short below the 2-day low. The Dr. Copper, a lot of people were messaging me and telling me how copper's in a bear market, and I said, look, this thing ran. It still hasn't broken the range low. It's still above the 200 MA, and we're now just futzing around. So I think you need to break 50 MA and the downtrend here like here you had to look above and fail. So yeah, we came down close to the range low. So you really need to break the 50 MA for more upside and hold the 200 MA to keep it kind of healthy. We'll leave it at that. I wasn't planning on talking about FCX, but let's do it since that's the one everyone likes to talk about. This looks very precarious. You know, if you lose this hammer low here of 1142, this could be coming down. You have a 50%, like I drew a range in here. You held the 61.8 multiple times. Now it seems like we're going to see the 78.6 and maybe even the 100% fib. This did hold trend. I'm sorry, this is the trend. So we're below it, and this was like a failed check back. So this is kind of a bearish pattern. That said, the 61.8 and the reference low are close. So if we do get down to like the high 8s or the low 9s, I'd probably sell some out of the money puts. I wouldn't say that this won't see 6s again, but at this point, I'd probably be selling those 6 puts. So that's my take on FCX. So some good calls I've made. One was on this Bitcoin. I was very loath to talk about this until I saw this breaking out here, and that's when I did my my little special that Wednesday, and I said I thought we would see the 61.8, and I thought we could potentially see the 2 times range. And if anyone is curious what an exhaustion gap looks like, this is it. Oddly, you had another move up even higher, lower high, and now back filling in some of this this froth. So I remember tweeting on this day, actually. I was like, you know, this is the day to kind of book it. And I think that if you saw this the next day, you might have, and you know, it was up that high, you might have been a little pissed. But if you'd sold, I think now you're probably happy about, you know, that situation. So Bitcoin, if this were to retest the breakout area in the 144s, I don't know that it will, but if it does, I'd probably be a right or right out buyer again. Gold. This is a very odd pattern here. This is sort of didn't quite get the downtrend line. We did get it basically into the reference highs. I was sort of looking for a perfect retest. It didn't get it. It came back down. Look where this broke down from, the 100 MA, and we're basically at the 100 MA. So long above the 100 MA, short below the 100 MA. Keep it simple. If you lose that, we could see the trend again. That would also coincide with the 78.6, where I would be an interested buyer. If you hold above the 100 MA, maybe it comes back to the 200 MA and maybe even a little higher. So 100 MA is the key there. GDX. This is interesting. 200 MA stalled on the move up, came back in, had a bit of a look below and fail here on a gap day. Those are the most powerful. And then now we're up. I mean, look where we are. We're actually above the channel again. So I'm a little curious. Look where the 100 MA. This is a little bit below it. So if you're aggressive, I think you could be long above Friday's high or short below Friday's low, because that would be a break of the this would be like a failed breakout. Like you had the look below and fail, this could be a look above and fail. So this does to me look like it may want to go higher, but Friday's range to me is key. Alrighty then. Silver. So this is a pretty fugly pattern. I actually started getting long into here, selling puts, buying some shares. I think I got it either at or just below the 78.6. I don't recall. It was looking good, had a bit of a low, and now back up again. So with a gap. So now this day is above 1, 2, 3, 4, 5, basically almost 6 days worth of trade, which is good. This I just think got way overdone and is probably due for a bounce. Yeah, I don't love that it took out this low, because you had a kind of a look above and fail. Now you're making a lower low here. Not great. This is usually the sign of a sort of a topping pattern when you have a double top and you break here. So this could check back, though, to the breakdown point. So short term, a little bit bullish silver. Longer term, way longer term, pretty bullish silver, but intermediate, it could want to make a move lower after a bounce. Some of the financials are just not giving us a lot of much to do here. You basically had a move to the gap fill. Now it bounced up, and now we're just chopping. I can't tell you what this thing is going to do. I will say this, though. As long as it's below the 50 MA, it's iffy to me. If it gets back up above the 50, then I would be a little bit more confident. The fact that the 50 and now the 100 are rolling over tells me that the pattern might not be resolved yet fully to the downside. If this were to get a move to channel low and even overshoot, because look, we overshot it on the upside, I'd be a buyer or a put seller down somewhere near the 50 or even the 61.8. I mean, this would be 100% really 100% retracement of kind of like the parabolic move. Look where it launched from, right at the 68. So that's 182.87. Any down moves into like the channel low, I'd probably be looking to sell out of the money puts at or below that strike. And if it got there, I'd probably try it for a right or right out long. JP Morgan. Now, this is an interesting setup if I've ever seen one. The 50 MA was all the support. It stalled here with tweezers. Now, follow me for a moment. This is a bearish pattern here, and this should technically roll over. It's kind of just chopping and holding the 20 MA, and you have a little gap fill down here. If you were to take out these tweezer highs in like 89.13, this would be pattern failure. That's the keys to the kingdom for the bulls. If you take out those tweezers, and that would be a move back up over the 50 MA, obviously, then I think you could just buy stop it. So you could put a buy stop in over here, and then I would say the head and shoulders pattern is failed and negated because you have this top here, these tops here, and this should go a hell of a lot higher. So I like a buy stop in up over the tweezers. Or if you want to play some put ratios, maybe for a play down to the reference low of the range, I think that would work. You have a 200 creeping up. I'd be a buyer, though, like down in the 77s or somewhere between the 77.88 and the 200 MA. I think that area will find some interest. You can see that's kind of like this range low. Excuse me. Wells Fargo. I think they are now found for moral liability with these bogus accounts they created. 200 MA, if you're looking for a right or right out, you can see you got the cattail, there's some hammers coming down here. I think somewhere in here it probably will bounce it again, believe it or not, but this fib isn't really relevant anymore because it went above there. So the 200 MA is going to be key. You can see moves below it haven't been sustainable. So I think somewhere between the 200 and this reference low should likely catch it. But look, I mean, we're making some lower highs and now lower lows. You'd really ideally want to see a higher low here and then a higher high here. And then I would say you can come up and see this high. look where that would be. Also, the backside of the old uptrend, and I don't think a lot of people would realize that that's a good right or right out short. But this high is key, and these lows are very key. Caterpillar. This was basically an exhaustion gap. You, oddly, because it almost looks like a professional gap, right? But it was to trend, and it's coming back. This was the breakout point. This is look belows and fails. So what I would do with CAT is play a little wait and see. I mean, if you must play this, you could be long. You have two double lows here. You could play against Friday's low. Or buy it up over the highs here of basically 101.92. Then I think it would come up. If you lose these two-day low, I think you could try right or right out short for a move down maybe to the gap fill, which is basically the 61.8 of the range. And at that point, with the 50 MA and the 100 right there, I'd be looking to sell some out of the money puts, probably around 90 bucks. Boeing. So this is a bit of a failed breakout, right? But we're kind of contained in a important range. And I had drawn this divide line in. It's a little bit of a proprietary level I have. But look where this held, this low here to the tick, pretty much. Well, not to the tick. It was a little bit above. But you have 2 days worth of consolidation range. This was the day where they had some delay of an engine or something. 50 MA has been key. As long as it holds the 50, I think it's like okay. Below it, and if you lose this low, I think it would be a short down to the range low in the 100 MA. And who knows, maybe even lower. But if you get back up above this high, this 185.65, I think it's game on and it's going much higher. If you're very aggressive, you could use the 2-day range, short below, long above. But if you're going to do that, my advice would be to go smaller size and then add over the high, or smaller size here and then add below the low. That's actually, I think, maybe the best way to play it. So the disaster du jour. This is, everyone was talking about why the market was down this week, why it was iffy. One, it's just been in this consolidation chop for a while. A lot of people wanted to equate it. Listen, blame everything on President Trump, right? I mean, I was sitting in traffic the other day. I was blaming President Trump. My food was undercooked the other night at dinner. Of course, it was Trump's fault. I'm a little tired doing this broadcast, and damn, it's Trump's fault. No, I'm just joking. But it's not. It has nothing to do with that. What it had to do with was this gap up on the Sunday futures, which made a high on the Sunday night. Then RTH on Monday was lower, so we had a liquidation break. And then you had retail blow up, and that is what caused this down move. Look at this. I mean, this is a very bearish pattern. Came down. This is Macy's, and it has some follow through. The good news, I guess, is that the last time this broke, it kind of listed lower and then kind of just chopped. Will this go down to $5? I don't know. It seems like it might, but look, again, here, the gap and listing. Here you had a gap up. It listed lower. Here, lower, and then sideways. So this 78.6 to me might be an interesting point to play for a bounce, right or right out, maybe even sell near dated out of the money puts. I don't think it's going down to 5 right away, but 78.6 to me would be an interesting spot to sell some near dated out of the money puts. Nordy's is coming down to this low, very key to hold. If it loses it, this might want to retest these lows down near 35. So very key, this low here, this 40.07. Again, stalled basically at the 200 MA until this can clear and hold the two. Look where this broke down from, and look where this kind of broke out from. Now it held below, failed. You got to clear and hold the 200 MA for this thing to even remotely start to repair. Walmart, everyone's been all goofy about, excited. They're now all bullish, right? They hated it down here, and now they're loving it up here. You have a 78.6 is basically where it broke down from. You have a gap fill and a channel high up here, and they report soon. So I've heard a lot of people say that Amazon is there. I mean, that Walmart's eventually going to be competing with Amazon. That's not happening for a few reasons. Walmart is basically associated with, it's like a step up maybe from dollar stores. It's sort of like the best of the dollar stores. It's considered low end. I don't shop there. I don't know a lot of more affluent people that would be shopping at Walmart. However, they all do shop at Amazon. Everyone shops on Amazon. I think Amazon is the new Walmart. So Walmart may have some strength, but I think it will be fadeable if it does happen. I'd be a buyer on a dip down into like this 200, 100 MA confluence near dated. I'd probably sell some out of the money puts. If there's juice like 65 strikes and below, I think that would be a winning trade short term. Let's get into the major market indices, and I cannot believe we're already a half hour deep and we're not into these. I did say that this was going to be a little bit of an ambitious video. So we broke the channel low. We came up. We've just been really kind of going sideways. Is this a secure high? Is it a lower high? I don't know. I usually would think that it would have a bit of a longer tail. It's a bit of a poor high if you ask me, but you do have two higher lows and two lower highs next to it, and we kind of have a look below and fail, and now we're contained inside these bars. So what's the deal? All right, this is the deal. If you're aggressive, this isn't even very aggressive, but above the 2-day high here, the tails, 139.57, it's a long for a move back up to the high and probably an all-time high. If we're below Friday's low, if you want to try short, considering this is a very narrow range, I guess you could. I'd probably be more interested in a short below this 238.13, because then I think we would see a 50 MA touch and a trend touch and kind of start filling in this gap a bit. So that's my trade on SPY. The expected move this week is $2.44, so that would be up to 241.42. We're down to 236.54. Of course, the down move could always be more because IV would likely pick up. IWM. This did fill the gap. Again, a very key range here. Look, you have a cattail here, and here you're kind of down, right? This was a gap down. Friday was a lot weaker in IWM. You're basically at a 50% fib. If you lose this low, I think we would see the 61.8 and the trend where it's probably a good idea to maybe cover for a bounce, but then I would say that this could constitute a second leg lower, and maybe there's a third. I mean, who knows? This is a key area. This was a breakout. This is a 50% fib, a reference low, the 50 and 100 MA confluence. If it can hold the 50 and 100 MA confluence, I think it's okay. If it loses that, it's a short. And if we lose that, maybe even the 200 at some point would come into play. I don't think it would be a straight shot, but the 200 could come back up to the reference range low. This is basically, could be, look at this, again, basically tweezers, which stalled it. Same kind of thing. This is a look above and fail, and now we're kind of mid-range. Look above and fails tend to rotate to the low end of the range. So if you lose the 50 and the 100 MA, I think we would rotate to the lower end of the range. If this holds, then we would come back up. Keep it simple. 225 means 139.76 or 135.26. One last thing, and I'm sorry to go back to this, in SPY. I hate to backtrack, but I just thought of this. Where we closed on this day is below this low, but if you go in the after hours, it was actually stronger and it closed inside this body, so it's a little less conclusive. Also on the ES, you know my key level here, the Fed day low, high of day from 315. The bulls need to be above it to stay bullish, and on Friday, they did it ever so slightly. I would have been a little bit more geesed up for Monday if we closed over to 2390.75, but we did hold this on the close, so it's not so conclusive that the next move, of course, would be down. Could be up very easily. I like buy stop up over these 2-day highs. Qs. Expected move is $1.49, so that's 140.09 or down to 137.11. Apple, Amazon, I've been affectionately referring to them as Brock Landers and Chest Rockwell, which is, of course, an homage to the characters played by the characters in Boogie Nights. New all-time high in the NASDAQ on Friday, off of a 10-day hold on the 10-day MA. So keep it simple. As long as we hold the 10-day, I guess it's a long. If you lose the 10-day, maybe we see the 20 MA. The aforementioned Brock Landers, played by Dirk Diggler, played by Mark Wahlberg. This day, remember I said this was the day I got long? This was a gap down that closed very strong, inside day, and then you took out those 2 days and the all-time high with this bar. Monday was just a killer if you were short. If you were long, it was a killer too. You did very well. This is now above the channel. Had 2 days of consolidation, up, and now a new all-time high in Apple on Friday. I think that this wants to see the 1.618 fib extension up at 162.39. I would say Apple is a BTD. Why? I can't tell you. There's something going on in the stock, in my opinion, that we aren't privy to at the moment that, of course, will present itself when the time is right. Warren Buffett is in this. He's upping his stake. That also is probably playing a significant role. I think he doubled or tripled. I think he tripled his position. That's a lot of dinero. So in Warren we trust. Look at this. I mean, this thing is even breaking this channel. You have like a channel. It's outside the channel. So short term, I do think we are going to mosey on up a little bit higher. It just has that look. So Amazon, which is Chest Rockwell, played by Reed Rothschild, played by, I can't think of that guy's name. For some reason, I can't think of that actor's name. It's really very frustrating when that happens. I could look it up quickly on IMDb while we're working on this. But Amazon looks pretty bullish. I would say that this is a, if you look in here, let me zoom in a little bit more. This is a professional gap. And if you remember what I said in the John C. Reilly, by the way, that's the guy. So it's Chest Rockwell, played by Reed Rothschild, which is, of course, played in real life by John C. Reilly, for those movie buffs. So remember what I said in last weekend's video. I needed to see a break of the downtrend and a higher high above a previous day high. Look, lower high, lower high, lower high, lower high. Here, broke it on a gap, charged up. We got long early in this move. Then you went a little higher, a little bit of a look above and fail, but pulled back ever so slightly. And then Friday again, just off to the races. Chest just loves to run. And we have an earnings high up here. This was where this earnings in after hours was 965. So that seems like a done deal. And then I guess this wants to press up to 1,000. It just seems like it wants to get going. I guess if you're long, you could use Friday's low as a stop, 951.53. But as long as this really holds the 10 MA where this held here, I think it's okay. And I'm definitely still a dip buyer in Amazon on any pullbacks. I'm kind of running out of male characters that I can reference by name in Boogie Nights, but Amber Waves, that was the character played by Julianne Moore. Definitely a fantastic actress, and keeping with the theme. Double top. I was leery on this because if this was a gap down on earnings, I think this would have came down to the 200 MA and maybe even lower. I don't know if we would have fully filled the gap, but it wouldn't surprise me. But I do think this would be trading with an 8 handle. So I was asked immediately in the after hours, what do I make of the move in NVIDIA? And I said it wasn't down, so it is going up, and it will make a new all-time high. And it certainly has. Very, very bullish. Just consolidating up here. If you do a 1.618 fib extension of this range and you do a 2 times range, the fib extension is 136.64, 2 times range is 146.35. And I am definitely a buyer on dips, particularly to retest the breakout point, which could happen before it goes higher, just to slap around some of the chasers. I would be selling, if you're a put seller, you want to sell puts at the 50 MA gap fill area, which is currently 102.94, so 102, 103, or even below that if you can get filled with any juice. I think those are the safe kind of plays, because if there was a gap fill, I do think that it would get bought. So that was amber waves for us, ladies and gentlemen. Google was another one of these monster up moves on earnings, but we are at the channel high, a little bit above it. And I am a little leery of the Goog because this was the kind of the progression line, and we're basically on it. This could grind higher. Frankly, all these stocks look like they want to go, right? They want to go to 1,000. So I think you could use this low if you're interested in a stop, 947.40, basically below the 10-day and below this kind of range-defining candle. I could also just see this thing rolling back and going sideways. That to me would make a lot of sense. But Google looks bullish, but I'm a little leery because we are at the channel high, even a little bit above it. So that was the Goog. The other big bad boys like Netflix looks real bullish. However, I've mentioned that we're coming into some of my price targets. The 1.618 measured move, depending on how you do it, is anywhere here between 164.16 and 168.14. So I do think that there is going to be more in Netflix, but I would be looking to sell that strength if we were to get up into that region. Tesla, another one of the monsters, maybe the Jack Horner of the Boogie Night move here. So you had the tweezers, the pullback. I said that this area was a key. I think a lot of people thought it was a foregone conclusion that we were going to get trend. I was frankly hoping we would. I thought that would be a good launch point, but we didn't quite, and we're back up at it. So do we have a double top in place? Is that it? Is it over? We did get my 1.618 fib extension. I can't tell you for sure. I tend to think that this could go sideways. If you want to be bearish and you want to try a short below like this 3-day range, below the 318.12, or if you want to be quick with a stop, that area to me would make sense. But above the 3-day high, probably could just keep going. We have the Model 3 coming out in July, and then in September he's launching the trucks. So I just don't see the catalyst. Tesla was fine, is now way up on almost at the highs based after a liquidation break. It seems to me like this is also wants to maybe go a bit higher. Very impressive move. Another one that was up a lot on earnings, I'm going to come back to some of the other ones I normally talk about, is WYNN. Someone was asking me, was this a professional gap? My answer was no, because it's still within range. If this would have gone higher and broke out of the range, I would say yes. But we're in a range here. This needs to clear 127.20, and then I think could go a little bit higher. WYNN is by far and away the best of all the gaming stocks. My leeriness, though, is look where we broke down from. We're basically there. I like that we got there, pulled back, and now there again, so this could keep going, but I think this may take a little time to work itself off, and then maybe eventually 149s. This area was key, but I think this area is going to take a little while to resolve, just my take on the WYNN. Some of the other big momentum stocks or whatever, big powerhouses that we often talk about. Microsoft, very bullish, but the 50 MA has been where it holds. You basically have a bit of a lower high and now starting to make some lower lows. There's a gap fill near the 50 MA, and there's a little trend here. So I would, if you want to be bearish, you could buy a put ratio. I call that kind of chicken hawk bullish because you're looking for a move lower, but then looking to get long lower, if that makes sense. So you're looking for like a short-term pullback, but to set up for a long. Or you could just wait. The 50 MA is a buy until it is not. Once that fails, then I'd say that the jig is up and the stock is cooked. Facebook. I think that all these Twitters and Snapchats are just showing how great Facebook truly is. I said that we have a progression line, 2 of them actually drawn in, and we were coming way into them, and that I was leery about earnings. I think Facebook just needs some time to cool off, pull back. Once it breaks the trend, it's along to the upside, but I would love a pullback to the 50 MA for a opportunity to sell some puts in this one again. For me right now, this is kind of just like the Chuck chill out of stocks. I think it just needs a little bit of time. It broke the 10-day MA, should technically see the 20, but if we got to the 50 and this sort of like channel low, I think the channel high is probably going to bounce it. But at some point, we should see the channel low and like the 50 MA, and at that point, I would sell puts down near like the 100 MA or this like 133s. I think that would hold for a while. So that's the Facebook. Price line is a victim of its own success. The channel high. Check this out. I drew in a channel high. We basically got it. And I was leery. It came back down. We're basically at the 1.6 with the breakout, and the 50 MA is here. So it's been a long time since Priceline has seen a channel low. That's also where a gap fill is. Will it happen this time? It's possible. Priceline has done things like fallen out of bed to channel lows. It's also taken time after a gap down and chop and then sideways. And so the 50 MA, you could see when it broke below it, that was the problem. Here again, it broke below the 50 MA, and then now it's been supporting for the most part. Its moves below have not been sustainable. 50 MA is the key. If it can hold the 50, it's hunky-dory. If it loses it, it's probably going to come down. That's just my take. So you have a breakout here, 50 MA. This area is very key, the 50 in particular. Expedia looks the same, but in the interest of saving time, we won't go through that. TWLO was a once loved stock that I don't love. I haven't loved in a while. However, this day interested me. You have a hammer low. We never took out the low again, and now we're basically tried above the high. We're above the body. This day's range is key. The owner or whatever, insiders, the CEO, someone bought stock, and the stock looked good early. It came back down, basically almost filled the gap, and then kind of closed okay. As long as it can hold 24s, I'm all right. Above the high, 24.69, I would probably add to the stock for I think we could see a test of the breakdown here, the 38.2. Could draw a fib in from this recent high to this low. 38.2 would make a lot of sense to me. 27s, maybe the 50% fib, but the 38.2 to me makes a hell of a lot of sense. Below the low, though, this is a clear stop out. It would not be a pretty situation. I will end on the IP. This was also, by the way, why I think a lot of the week was iffy. This was like the IPO of the century, the recent one, the Snapchat. Shouldn't say century, but IPO of a long time, and this thing just dumped really hard into the IPO level of the 17. It was also a channel low, which made a lot of sense to me for a BTD. So if you draw in a Fibonacci retracement, I think this could also maybe see the 38.2, which is around 2019, and at that point it might want to roll over again. We'll see. But Snap, I don't think that this thing is just completely over. They have a big lockup coming up, and I think that there's going to be a lot of people who are kind of leery with that until that lockup is over. So I don't know the exact date on that, but I may by the next video. So I do think that if this is going to keep going, it could see the 38.2, but at that point I'd probably get out of the long if you took it in the 17s. Anyway, that's my story. I'm sticking to it. If you like this video, please retweet it, hit the thumbs up, be sure to subscribe to my YouTube channel, and let's have a great week. I will be looking to do a YouTube live probably Wednesday or Thursday. Cheers.